Hello traders and investors. Welcome to Share Market C2C channel for a stock specific analysis episode. In this video, we are going to deep analysis and deep dive on why Tata Motors crashed 50% and what is the right time to buy for this stock. So how is financial year 2026 outlook is? So what are the key risks to invest on this stock? So with all overall this we have identified a smart money strategy for Tata Motors. Let's get into the video. So if you are a beginner, we would like to have a quick brief about Tata Motors. So Tata Motors is a Nifty 50 stock. It's a large cap stock as well, having a market cap of 2.19 lakh crores. They are the global leader in the automobile manufacturing as well. They are offering a wide range of vehicles and they are the market leader in India for the EV vehicles as well. So they are dealing with the commercial vehicles, passenger vehicles and also the personal vehicles. So why the stock is crashed? So you have to understand the four key reasons for this. So the main one is JLR, which is Jaguar and Land Rover US shipment pause. So you know that 25% Trump tariffs is the main hit for the profitability. So even though the Trump government have paused for 90 days, still it is a key challenge in front of the automobile sector for its exporting. So weakness in Europe and China. So the demand seems to be very slow in the markets and EV growth is also stable. So the flat 2025 financial year sales and also the competitors from the Mahindra and BYD, which is a Chinese company in the EV market, is also a step back for the EV growth in Tata Motors. Also, the PV segment also slowed down, which is passenger vehicle segment. It's also Indian growth. The passenger vehicle sector is slowed down. So these are the reasons why the stock have been crashed. So what are the near-term challenges in this stock in front of us? So as we mentioned, US tariff impact is going to be have a higher prices and also it's going to make a lower demand on the JLR, which is Jaguar and Land Rover sectors. Also the price hike. Fewer Americans are buying the Range Rovers and which is having a good competition in the local competition with the US market, which is BMW and Mercedes is showing a good gain on its local factories. And global uncertainty, which we also mentioned, the recession across the global is the major impact for the near-term challenges for this stock. So what are going to be a long-term positives for this stocks? So in Indian market, the commercial vehicle demand is going to be increased because of the government is focusing on the infrastructurings. So that's it is a positive. So the commercial vehicles still it is going to be a good demand from the Tata Motors and they are the market leader in India for the commercial vehicles. So JLR premium brand pricing power may offset the tariffs. That is one of the key reason which we'll be going to see in detail in the next slide. So valuation support, the stock is in the multi-year low. That is one of the key reason why we are analyzing this stock. As we mentioned, the CV segment is going to be boom because of the government infrastructure spending. So automatically the commercial vehicles demand will be increased and automatically Tata Motors will be gaining. And the major important thing is EV sector 2.0 is coming on the curve model, so which could increase the sales growth of the EV stock, EV vehicles. And the most important thing is the price to the book value is at 3, which is a year low. So you can see at its peak it was almost to the 6. So now it is almost to 2.8 to 3. This is the very important factor why you have to look into this stock for the long-term growth. So with all these things, so we are going to have a financial year outlook for this stock. If it's going to be having a tariff issue, if it's not going to be have a tariff issue, so we are giving with the 3 slides of scenarios how the stock is going to perform and what are the returns we can expect from if there is a US sales being totally halted, still the stock have a potential of having a nearly to a 7% to 8% returns from the current level. Even there is a 50% reduced of the spending shipment to the US. Also, the stock can perform to the level of 13% returns from its current level. If there is the tariffs being passed to the consumers itself, accepting the tariffs, the stock have a potential to move almost like a 22 percentage. That is how the scenario with the current price of the Tata Motors, the financial year 2026 is being looked into. With all these things, how the technical levels and the targets, we can see the currently the stock is equal weight, which also indicating a very bearish mode. With current technical charts which we are following, with all these things, the stock is showing in the bearish mode. So which 52 weeks low is 588 and 52 week high is 1200. So the support is standing at 550. That is the key demand zone. The stock is currently at 595 rupees. So please don't get into the stock at this level. 550 is the perfect level of entry for this stock. Even if you go to 520, you have to wait for it to get into it. So RSI, relative strength index, it is showing oversold zone, which immediately have a bounce back. So if you are a short-term investor, I have thing to say how you have to enter when there is a breakout. So that's the key indicators are showing. So the support is at 550. That will be the place where mostly will be demanding, will be rising for this stock. So what are the risks to watch for this stock? So there is a trade war escalation where the premium Jaguar and Land Rover is going to suffer much. So EV competition, which is a key challenge for the Tata Motors by the demands from the other competitors, and also global recessions, which is we have already mentioned, the commercial vehicles and passenger vehicles seems to be a demand drops. So when should you buy? So for a long-term investors, as we mentioned, 550 will be the safe entry for the long term. And for the short term, you have to wait for the breakout of 620 rupees. Then you can go for the short term. So you have to maintain the portfolio of 3 to 5% for this stock based on your fund allocation and the portfolio that you are maintaining. So the final call that we are giving is you have to wait for the dip, and the ideal price for entry, as we mentioned, it's clearly 520 to 550 rupees. With this, you have really a good return in place, and we have to wait for the clarity on the tariffs if needed. So if there is a tariff removed, then the stock will fly like anything. So that is the safest play to enter the stock is 520 to 550 area. With all these scenarios, so the bull case scenario, you will be getting the target of 750 to 800 with 25 to 35% potential of upside. In the base case, which is a neutral case, still you will be getting 10 to 20% of upside. And in very bear case scenario also, you will be having only 10% of downside. And this quality stock, but the 10% down, even you are holding, it's nothing matter, because the Tata Motors is demanding always a nifty 50 high quality stock, and it's a blue chip stock. Nothing to worry on this stock as well. So I have been invested on this stock for a long time, and I'm having a good profit margin on this stock. And yes, it's really a good recommended stock for long-term investors. I think this video is beneficial for you. If you like this video, please subscribe the channel and share your thoughts. And purely it's an educational purpose. You have to consult your fund manager or your experts before investing on any stocks. Thank you. Stay safe, investor.